Good morning, everybody. This is Harold coming to you again. This is January the 27th, 2016. And what do I say? Keep an eye on your money. So, today I'm going to talk about a lot of different things, but the stock market is going to go down or sideways today. But if you look at the charts, which I'm going to have some charts behind me, and I'm going to talk about them, but I'm not going to refer to them. But you can see the charts as I go along. But coal is down 30% over the past 7 years. The EPA is what's killing the coal industry. The EPA has put out 8,000 new EPA rules on coal companies in the past 7 years. 8,000 new regulations. There are record coal plants closing, and coal is one of the cheapest sources of electricity that you can have, and that's why electricity has went up so much, is because you've got all this solar stuff, and a lot of these solar turbines that they're putting in, they're sitting all over the United States, but there's not enough wind to make them generate electricity. So then they have to get that electricity from either solar panels that create electricity, or the mirrored solar panels that heat water to make steam, to make a steam generated power plant. So yeah, coal is cheap, and the EPA is killing that. But they're supporting these other things that cost, 50 times more to produce and to make electricity, but it's just not working. So, and with the energy being so cheap now because of the oil prices going down, electric car sales have really plummeted. Why buy an electric car and pay $50,000 for an electric car when you can pay $20,000 for a gasoline car? And now, at the prices that we're at, you're essentially getting the same mileage or close to the same mileage. So, another thing driving the stock market down, well, it all goes to oil and the economy. No jobs. People just stop moving around. But the trucking industry is down 2%. And if they're not hauling oil, coal, the railroad companies that haul coal, they're down 8%. So that means they're delivering 8% less coal now than they were 7 years ago. It's probably more than that, but that's what that's a good number that I'm comfortable with saying. Boeing is down. They make airplanes. Well, they're getting ready to come back because the news on the street is Iran is getting ready to make a big purchase from Boeing, and it'll probably bring their stock back up and get their factories working again a lot. But that's that. We lifted that embargo on Iran and gave them, from what I understand, it's $150 to $200 billion. So the money that's not going to terrorism is going to go to buy planes. And what they're going to do with those planes, you can use your imagination. So beware of the stock market and the pump and dump, because they're still doing it. As bad as everything is, and the whole world is on fire except for the United States, and we're on the edges around the United States is kind of showing a little bit of that, and they're still pumping and dumping. Buy. Well, what they're not telling you is, I know people in real estate and stuff, and now realtors are selling homes and renting homes and leasing homes to two families. It's taking a two-family income, 4 people working, to run a household. Now that's something that you don't hear anyone talking about, and that's a fact. Another thing that you don't see in the news is Puerto Rico is bankrupt, and we support Puerto Rico. and their power plant is completely bankrupt. And are we going to bail them out? Probably, because we already have so much invested down there that you can't hardly not do it. But what you want to watch on these stocks in the stock market is when these stocks go down, and they don't have no qualms about saying it. You know, the stock will go down, and instead of investors investing in the company and buying stocks, the CEO of the company that's been given stocks options for free, he uses his stock options to buy the stock back and get the stock back up or above where it was at. And that's why you have the roller coaster ride thing going. If it wasn't for the buybacks of the CEOs and the federal government, I think the stock would be a lot lower than what it, well, I know it would be a lot lower than it is. I mean, the United States itself, we badmouth China about manipulating the stock market, and the U.S. federal government is doing a buyback on stocks. It has been doing it for 10 years. And, they spent, from what I understand, I don't know the number is exactly right, but $7 trillion plus of taxpayer monies buying back stocks, by investing in the stock market. And with it down almost 2,000 points from where its high was, we're looking at probably $2 trillion is just gone. So, I'm still looking for, in the very near future, for the stock to hit 15.5. And when it does, when the Dow Jones hits 15.5 and goes down below that, I believe that's going to be a tipping point that's going to drag it down quite a bit further than that. If you take back all the buybacks that all these CEOs have done and that the U.S. federal government has done with their $7 trillion plus, I think the stock market, if all those buybacks were done and were taken back, and the stock market is where it should be, it would probably be between 5 and 10,000 on the Dow Jones. The way the economy is and everything, and we're just teetering on 0% growth. They say 2%, but they can't. I think that's enough margin of error that it could be actually 2% negative. But they're going to have to stop the bailouts of all these companies, countries, banks. The bailouts have got to stop. I mean, the companies have got to be able to fail. If they can't fail, then it's not a working economy. So, also I want to ask you, I don't know if you're a General Motors customer or not, but I'm just wondering how many loyal buyers of General Motors, Cadillac, and GMC, how many of those the loyal people that buy those products are going to stop buying those products now that they've moved plants to China and are manufacturing cars and trucks and SUVs in China? I just am appalled at that they don't have crank up the factories here in the United States and export the cars to China. Now, like I said before, I'm not a stockbroker. I'm out of the stock market. I haven't been in it since 2007 or 8. And I'm saying the stock's going to continue to go down, and I look for it to go down between 5 and 10,000 on the Dow Jones. But on the other hand, some people are saying it's going to go to 30,000. It's going to go up. So I don't think that's true. It will eventually, maybe 100 years from now. And if you're young and you're investing in the stock market and you're going to live that long, that's probably a good buy. But stay out of the ETFs. ETFs are a bad buy because they bundle all these bad things together and sell you on an ETF. And then when those companies go bankrupt, then the ETF loses value, and the only thing that's left is the companies that survive, which it's just not a good deal. ETFs, you need to stay away from ETFs. If your broker is telling you to buy ETFs and diversify your money, that's not how you want to diversify your money. And I say right now, cash is king. You should have 50% of your money in cash. But I'm not giving you advice. I'm giving you my opinion. So cash is king in 2016. Hey, that's a pretty good slogan. And like I always say, this is Harold. Please give me a thumbs up, a like, and subscribe. And keep an eye on your money.